Rebecca Walser, president of Walser Wealth Management. Rebecca, great to speak with you as always. We have seen a ton of volatility in the market over the past couple of weeks. Do you believe that New York City entering phase 2 of its reopening today, Disney beginning its process of reopening resorts before parks open in mid-July, are we going to see markets stabilize or trend upwards, at least for a little while?
You know, Brad, there's mixed data, right? So we've got coronavirus case counts going up or surging, as I've heard a lot of media refer to it. And so I do think that as people see things normalizing somewhat, in New York City, basically people coming back into the actual, high rises downtown in Manhattan and starting to work again, 300,000 expected. And Disney saying, okay, well, our resorts are starting to open and our parks will be open in really less than a month. That's very helpful, and that sends the right signal to get back out there and engage, because 2/3 of our market, let's be honest, is retail spending, which we just haven't had. But yet, it's always balanced by this give and take of what the media is portraying as, these case counts. And I would just point out, Brad, that what we need to focus on is the hospitalizations and the death rate. And as long as those keep trending downwards like they have been, then people should start to really feel confident they can go back out and resume their normal life.
Okay, so we're seeing the spike in cases, sure, across much of the country. Right now, when you look closely at the numbers, what are you seeing? What impact will that have on the markets? Will the markets focus more on, and continue to focus on, I should say, mortality, especially as we see reopening and start to evaluate where there are some of the different demographics here in America that start to get comfortable with reacclimating themselves in the public space, if you will?
Yeah, that is a great question, Brad. And I wish every investor would ask that question, because if they did, they would not be investing or making decisions emotionally. And that is where I think we get into trouble. If you really dissect the data and look at it, what you see is a younger segment of the population now testing positive and a lot of asymptomatic people testing positive. And I think that is why the trend of downward hospitalizations and downward deaths continues, because what's happening is we're reopening, we're re-engaging, and you're getting people that are being exposed to the virus but are not developing symptoms, but they are developing antibodies, and therefore they're going to count as a positive, but in fact they are out and they're active and they're not becoming sick. And that really is the establishment of a mass kind of immunization, which is what we need, so that we don't actually have to worry about, people, just a really high rate of people getting very, very sick. So that's a positive for investors. Yet I think it's portrayed, unfortunately, in the media as a really negative, that we are not under or in control of the situation. And that's going to make people hold back necessarily on going out to that restaurant or going and having a drink after work at the bar or going to a theater when it gets reopened, AMC reopening in the middle of July next month. So all of these things are going to make people stop and think. And so I really encourage people to dive deeper into the numbers, put everything into context, realize the testing has gone up substantially, and let's not make emotional decisions, because we do need people to go back out and live their lives.
Well, retail investors, such as those trading on Robinhood, such as the sports bettors even, who have made their way into the equity markets because of the lack of sports starting to come back. Some of those retail investors, they've been finding success in recent months, more so than some of the professional investors. So what strategies are you noticing from retail investors? Do they carry over to a post-pandemic environment?
Yeah, it's really interesting to look at the data on that, Brad, because what you're seeing is a lot of retail investors got their stimulus check and immediately invested it, on a 24 PE ratio in the market. And hedge funds, they're not chasing the alpha. They're going to be hedged. So you're not seeing them chase the market, because even with the extreme liquidity, they're not doing that. So they're underperforming compared to these retail investors. And you almost might say that Robinhood is sort of setting the market to some extent, right? Because if you look at their top 30, basically trades, or you look at their top 30, most invested in the last couple of days or the last week or so, you'll see what these retail investors are actually buying. And they're almost sort of, like I said, setting their own market, because they're reporting what the top trades are. And then more people are coming online to that platform and saying, I don't know what I'm doing. I'm just going to buy what everybody else is buying. And they're sort of creating this little retail, I don't want to say bubble. That's not the right term. But you understand what I'm saying, is that there's sort of just this parlaying of additional people that are sort of novices. The most trades we saw, or the most money that we saw, really came in from the middle class, $35,000 to $75,000 annual income on Robinhood specifically. So it's a really interesting phenomenon of people that are sort of, really just going after this set of groups of stocks that, some of them have not done great. Let's be clear. I mean, Hertz and USO, not great. But besides those two examples, we definitely have seen this trend of a novice investor getting in and making some activity out of what maybe before they didn't do.
So I guess with that mindset, what is to say that a novice investor, a new investor, is to look at the market and say, after I've seen all of these gains in some of the names that I've added to my portfolio, that not only will I take those profits, but I'll reinvest them, or will I take those profits completely off of the table right now and just look at that as a capital gain for myself to put into some other facet of my life?
Well, obviously, we'd love for them to reinvest them and to keep, to learn more about it, Brad, to get a little more educated on what they're actually tracking, what their preferences are, and to stay with it. But if it's really kind of a novice thing that they were at home, they were bored, they couldn't bet on anything else, they got sick of playing video games, they got a stimulus check and they invested it, then I don't know if that trend will continue long term. Hopefully, them making money and being successful this fast will give them an addiction to keep, the snowball going, because that's what we want people to do, is to stay, hey, this is actually long-term a really good thing, and expect downs and ups. You're not going to always win when you get in, and that's the other thing, is if people don't continue to win, will they get out because they're sad now. So it's not gambling, but people can treat it like that sometimes.
And just quickly, while we have you, last time we saw the NASDAQ close at a record, we actually, the next day after, I believe, if my memory serves me correctly, we actually saw a move lower sharply the day thereafter in the next session. What are you expecting in terms of the tech sector right now that's seen such success during the work from home, everything from home environment? Does this trend continue, or do we see a little bit more volatility in the future of this particular sector right now?
Great question, Brad. I think that the tech sector up 11%, over 11% year to date, has been obviously the bulwark of this entire situation with coronavirus. And people are now realizing, hey, I can live my life predominantly virtually, or my business can be run predominantly virtually, and maybe I don't have to go back and be in person so much. And so we're going to continue to see trends, because people are going to continue to leverage the technology that they started to use when they were forced to go home as an ongoing, maybe sort of even new hybrid way of working, sometimes in the office and sometimes remotely. So I think it's going to continue. I don't know that we'll continue to push as fast upward, because people will realize that these stocks, have really been, I'm not going to say they're overbought, but they definitely have been buying in after the fact. And so I don't know if we'll continue at this pace, but certainly, Brad, I do think that this new normalized situation where you're going to leverage more technology into both your business and your personal life will continue to see these stocks through at least this year give us positive returns.
Maybe not overbought, but certainly getting a little crowded there. Rebecca
Yes.
Walser, President of Walser Wealth Management. Great to have you back on the show as always. Thanks for the insight.